Hello and welcome to our RKL webinar series, Coronavirus and its Impact on People, Process, and Profit. Before we start today's call, we would like to share a couple of housekeeping items. This webinar is being recorded. We will provide you a link to the recording when it is available via email. All materials were emailed to all registrants around 10:15 this morning. You can find the materials on our Coronavirus Resource Center at rklcpa.com. All lines are muted and will remain muted during the webinar. If you have questions to ask during the webinar, use the Q&A button at the bottom of your screen. 1 hour of CPE in the field of business law will be issued to participants on this call. To receive your CPE, participants must be connected to the session, both audio and presentation, for over 50 minutes. Additionally, participants must answer all 3 questions and elements of engagement. Elements of engagement will be through the polling feature. If you're viewing through a web browser, ensure that you have pop-ups enabled. Additionally, if you're using multiple monitors, the poll may appear on your second screen. At this time, I would like to turn the presentation over to Eric Wenger, who will introduce our team for today's webinar. Eric, the floor is yours.
Good morning, everyone. Thank you so much, Jen, and welcome to the third in our series of webinars dealing with coronavirus. I would have guessed that this week would be a little bit lower key based on the past 2 weeks. Our experience was that, the first week it was the Families First Act that was just in the process of getting passed last week while we were on our webinar on Friday. The House, if you recall, was debating the CARES Act, which was then signed later on Friday. And here we are a week later, and we don't have a new legislation package, but what we do have is a lot of changes and a lot of interest and anticipation around the Paycheck Protection Program, PPP. Before we hop into our content for today, I did just want to share an encouraging story with everyone, and that is that, as we look at the headlines, there's so much negative news, there's a lot of anxiety, a lot of disruption. And I think, I just wanted to share something that happened here within our family experience. As you know, everybody, of course, is working from home, and we're broadcasting from our homes as well. And we've got a lot of business leaders and executives on the line, and we've been talking with our clients and trying to figure out how to navigate some mighty challenging times. And the story that came to mind was a couple days ago. Our son, Josh, who is 18, he's a senior at Warwick High School in Lidditz. And so, of course, with being part of the class of 2020, the whole idea of spring sports and prom and graduation and so forth are just sort of off the table at this point. And I've got to give a shout out to Dr. April Hershey, who is the superintendent of Warwick Schools. I highly doubt that she's on our call right now, but I am so impressed with what she did, and I share this story just because I think it's an encouraging reminder of how each of us in our own spheres of influence can try to sort of go above and beyond. And what ended up happening was that she actually placed an individual personalized phone call, had a phone call with every single senior in the class. There's more than 300 kids in his class. And she wasn't able to tell them all sorts of good news. It was basically to say, yeah, your graduation ceremony is sort of not going to happen. You're still going to graduate, but we don't know what this looks like. It was a message of empathy, a discussion of, an apology that, certainly she's not responsible for, but she took that discussion and handled it. And here we are with, in the middle of a worldwide pandemic, and the superintendent chooses that as a priority. And it dawned on me to think, she so could have easily attempted to delegate that to another person. There's the assistant superintendent, maybe a high school principal, a guidance counselor. They could have done a broadcast video. They could have sent an email, but instead it was that personal touch and going above and beyond. And so I was just encouraged by the the initiative and would like to likewise encourage each of you to think about how you can encourage your team in these times of disruption. As far as today's presentation, the three of us will be walking through this slide deck. We're going to spend some time first talking about this component of the CARES Act, which we introduced last week. It's called the Paycheck Protection Program, again, PPP. And in tandem with that, loan forgiveness. Ryan Hurst and I will be jointly presenting on this topic. And then we'll talk some about tax filing deadlines and payment deadlines that have shifted. We'll talk about Section 139, which I had briefly introduced 2 weeks ago as a code section of relevance these days. And Stephane Smith will be doing wrap up for us here with, again, some frequently asked questions that are coming in on the HR side. I got to tell you too, so Ryan and I have been trading emails and messages, as have many of our partners and team members, on all the stuff that's been changing. I got an email from Ryan the other day. It was 12:30 a.m. I was asleep at that point, fortunately, but I was awake at 4:30 and found his email. And what he said in there was eat, sleep, PPP, repeat. And I'll let you interpret that however you'd like, but that's exactly what we've been doing lately. We are going to move here to a polling question at the top of this presentation. So if you'd like to bring up that polling question, Jen, to be eligible for CPE, all three of our polling questions that we're going to have throughout this hour-long session need to be answered. And the first question is up on the screen. Hopefully you can see it. Do you know what resources are available from the Small Business Administration, SBA, if your business is eligible for coronavirus relief? And the options there to answer are yes, no, I'm hoping to find out today. And so I'm just going to slide this across the screen a little bit. And if you'd like to just answer that again, there's not a right or wrong answer here. These are simply to make sure that we have a live audience with us engaged, and we'll be able to grant you guys CPE if you're a licensed CPA. So I'll just pause here a minute. Again, if everybody could hustle back to their computer if you're not there at the moment and get that polling question answered. And once you answer the question, that should disappear from your screen. So we decided to add this image because this is exactly what is happening at the moment. Today is an interesting day in the banking world and the business world. And I've titled this slide, "The Formula for a Virtual Stampede to the Bank Today," because of course you can't really go there in person more than likely. You're doing a lot of this stuff remotely. But what really just sort of accentuated this rush on the bank that we've been anticipating is just last evening, the Small Business Administration put out something called an interim final rule, which you can see that footnoted there at the bottom. Interim final rule doesn't sound terribly final to me. It sounds like the SBA will, and in fact have, continued to further modify those rules. And as a result, everybody's been scrambling. And one of the frequently asked questions that was addressed in last night's guidance from SBA, question M, is the PPP first come, first served? And the answer back from the SBA is yes. And so the concern here is that, in that $2 trillion package, there's $349 billion for the PPP program. And there's certainly, we've previously expressed concerns that there's not enough money to go around for all the businesses that want it. And there's a lot of questions around how's that prioritization going to work. And now we see that first come, first served is the order of the day. At this point, I'm going to turn this over to Ryan. He's going to walk us through some of the specifics on PPP.
Good morning, everybody. This is Ryan Hurst. I'm a partner in RKL's Business Consulting Services Group. I am the voice that you heard erroneously at the beginning of this, as I guess I was theoretically trying to one-up Robin's internet or computer turmoil from last week. This week at about 10:53 this morning, my personal Wi-Fi decided it was going to crash while I am connected and presenting to all of you. So we got back up online in a hurry, and hopefully we can make it through the rest of this on my LTE connection and without any issue. And Eric, thank you very much for sharing that story at the beginning. I think it's a great lesson for us all through this. I'm really amazed at the way that the superintendent approached things with such poise and grace. And I think, while we all need to act expeditiously with respect to the PPP, or sometimes I'll call it the triple P, while we have to act expeditiously, I think it's also important for us to try to stay as level-headed as possible and understanding that there are many forces at play here and many areas that are outside of the control of you as potential borrowers, us as accountants trying to interpret the guidance that's out there, the banks that are trying to get their own guidance from the SBA and the government. So there's a lot going on out here. We are all working tirelessly to try to do things as best as possible, but we certainly appreciate your patience with us along the way, as we're all going to help you get through this. This first slide, what I wanted to do is kind of start out with the concept of what the triple P is all about, what the government was looking to achieve when they put this into place. So this is a roughly $350 billion program as part of the CARES Act. The $350 billion was slated for small businesses. We'll get into what is a small business in a moment as it relates to this program. But basically what the government's philosophy was at the onset of this is saying, we want to do two things. We want to get a lot of money into the small business and economy at a very rapid pace, probably an unprecedentedly rapid pace. We want to get a lot of liquidity into the marketplace. And two, we want to do that because we want to stabilize the small business market, which comprises the vast, vast majority of businesses in the United States and therefore the overall U.S. economy. So what they're really looking to do and looking to achieve, and I think this is important for everybody to understand as we interpret the guidelines that are out there, what really the goal of this is to keep businesses afloat during the next few months. It's to sort of weather the storm. The purpose is not to enrich any one individual. It's to really press pause and say, where are we? So as far as the triple P eligibility, there's some size criteria out there. The main one that everybody has heard about is 500 or fewer total employees. What we mean by total employees, the guidance is that we are not doing this on a full-time equivalent basis. A quick full-time equivalent basis mathematics is if you say if you have one full-time person and one part-time person who works 20 hours a week, you would have 2 total employees, but you would have 1.5 FTEs or full-time equivalents. So just understand that for the purposes of this test, it is not on an FTE basis. It is on a total employee basis. So that's the first option for being eligible, is that 500 or fewer total employees. The second option, for certain industries, there are industry level criteria. You can actually go to this link on the SBA's website and see if your particular industry qualifies based on these additional criteria, which are likely based on employee size. If you're under 500 in total employees, you're good to go. You don't need to go to the industry level criteria. If you're over 500, then that's the case where you might want to look at this link and go that route to see if there's another way to get in. A note on employees, there's been a lot of questions out there regarding independent contractors. Independent contractors do not count as part of this employees. They are not considered employees for this test. A caveat with respect to the 500 employees is this so-called business affiliates rule. There is a rule in place that the SBA has had in historically where they're basically looking to ensure that businesses aren't being split apart into multiple businesses and each individual piece passes the test, but the businesses in aggregate do not. In many cases, that makes perfect logical sense because they're not looking for anyone to game the system simply by splitting one operating entity into multiple operating entities and therefore qualifying. However, like many things in life, when a broad rule is put into place, sometimes others maybe unintentionally get caught up in that rule. For instance, private equity groups, venture capital groups, those larger investors that might be investing in more than one business or referred to as a portfolio company. In this case, at least current guidance is they would get wrapped up into this affiliates rule. So if you have 6 independent companies, completely different businesses, but they're owned by the same group that has control over all of them, those employees would get aggregated together. So maybe you have 6 different businesses that each have 100 employees. So each business on its own would be under 500. But in aggregate, you're now dealing with 600 employees. And as long as that private equity group or ownership group has control, and then the businesses will be aggregated, you're at 600 in total. 600 is greater than 500, and that would disqualify. Our understanding is that the ACG, which is an organization geared towards private equity groups, is lobbying with the government to try to get an exception from this rule, as well as other organizations are as well. The only exception that I'm aware of so far is for folks in the accommodations, food service, or franchise industries, where they got it put on a per physical location basis. That is the main criteria that everybody's been focusing on so far. There's a piece of it that's almost implied, but in some cases you do have to be cautious. The applicants for these loans do need to certify that there is current economic uncertainty that is making the loan necessary to support ongoing operations. So there really is a needs test, although that hasn't gotten a focus here because I think many business owners will claim they are impacted in some way, shape, or form. Last couple points on this slide, this does apply to 501c3 and 501c19 nonprofits, as well as tribal business concerns. And as Eric mentioned, this is on a first come, first served basis. So how does this program work? And Eric and I are going to kind of tag team this today. I'm going to cover the highlights here, and Eric's going to dive deeper into some examples as it relates to one piece of this. So what this is this is really structured. It's a loan that is ultimately forgivable. So you can almost flip that around and say, it's a grant, but if you don't meet the terms of the grant, it's going to turn back into a loan. So what does that mean? There's 2 components to this. There is the loan amount. It's how much you can qualify for. And then there's the loan forgiveness. How much of that amount that you qualify for and hopefully receive can you actually be forgiven for and then ultimately not owe back to your lender? The loan amount is based on 2.5 times average monthly payroll costs. That is there's been some conflicting guidance out there over the last few days. What period of time does that 2.5 times apply to? What period of time is the monthly payroll cost? Is it over a trailing 12-month basis, or is it from calendar year 2019? Last night's publication, I think, attempted to clarify this, but there was still some ambiguity in the document. However, everything we're seeing, including the updated loan application, which was released overnight, is pointing to calendar year 2019 as being the way to go. I can't say that with 100% certainty at this point because they've been back and forth before, but that is the way to go. And if you're concerned at this point about making sure that you definitely have your ducks in a row, I'd say go with 2019, but have a TTM basis at the ready in case something changes back. It's also important to know that this loan is capped out at $10 million. So if for whatever reason you do the math at 2.5 times your payroll costs and it comes out to more than $10 million, you're topped out at 10 million. You can only get 10 million. Loan forgiveness. Eric is going to talk about this more in a little bit. This is the piece of it that you get your amount. So say you qualify for $500,000. You get your loan that's approved. You get your $500,000. There's going to be tests later on that could have that entire $500,000 be forgiven, or perhaps a portion thereof. The one thing is to note, based on those tests, if you ultimately do those tests, you got a $500,000 loan. The tests come back and say, oh, you could actually forgive, you could forgive $550,000. Nope, can't do that. It's capped at $500,000, no matter what those tests say. The last piece on this slide is really just looking at the right side. This is the kind of the fallback piece. So if you do not have a 100% forgivable element to this loan, like I said, it really is a grant that kind of reverts to a loan, or at least that's how you can think about it. It ends up being a 2-year term with an interest rate of 1%. That is a correct figure. They updated that last night. No payments are due on this loan for the first 6 months. So I think what they're trying to get at here is, look, if it's ultimately going to be forgiven, let's not stress our businesses or stress our borrowers with having to make payments and then ultimately have those payments reimbursed. Just know, though, that the interest does accrue during that period. So if you end up having a piece that is not forgiven, the interest starts to build up on that over time from the date of the loan. The interest on the loan is forgiven if the loan is forgiven. So you're off the hook for the interest as long as the loan itself gets forgiven. Couple other provisions there that I don't think are as relevant. So we'll move on from this slide. So a moment ago, I mentioned 2.5 times payroll costs, and this payroll cost concept is also going to come into play when Eric covers the forgiveness more in a couple minutes. So what are payroll costs? How are they actually defining this? And what we are pulling out of the guidance is a few things. These payroll costs include salaries, wages, commissions, and tips. And this piece of it, our understanding, it's this piece and this piece alone that is capped at $100,000 annually for each employee. So if you run your payroll register and you determine that 2 employees are making $125,000 or made $125,000 in salary in 2019, you would look at each of those $125,000 people and say, we're going to kick out the excess over $100,000. So $25,000 times 2, or $50,000 would get kicked out of that calculation for this purpose. However, the 100,000 piece for both of them would in fact get included for calculating payroll costs. On top of that, there's a few other items here. I'm not going to get into these in great detail, or at least read them. Understand that as it relates to bullet number 4, the employee benefits, group health care coverage, that one's one that still has a little bit of ambiguity to it, because we've been getting some questions. What about dental, vision, some of those other benefits? The short answer is we do not know conclusively. You see what we know, and that's what's here on the page. The exclusions at the bottom of the slide. So we already talked about the excess compensation in the first bullet. Bullet 2 is one that has gotten some attention of late as well. So this is one that's a little confusing the way they wrote it. There's been some questions leading up to last night's guidance as to whether you need to strip out employee withholdings for income taxes and FICA taxes from the payroll register. Our interpretation is, for purposes of payroll costs for the loan amount, that answer is no, you do not need to strip those out. The reason being, check out these dates on this bullet point. So if we're using 2019 as our base year in calculating the payroll cost amount for the loan application, we're talking about 2020 dates here, and you only have to exclude these amounts for 2020. Now keep in mind, this is going to impact things on the forgiveness side. So beware of that when you ultimately are calculating loan forgiveness, but don't worry about stripping out these employee income tax withholdings or FICA taxes for employees when you're doing the payroll tax cost or your payroll cost for the loan amount. Last one is independent contractors. Again, just like the number of employees, independent contractors should be excluded from the calculation of payroll costs. How do I apply? This has gotten a lot of attention of late because the date, April 3rd, you'll notice that that is today. That is when the government the other day said that this will actually open up. It is a huge mixed reaction and somewhat chaotic in the environment with that. Some banks are deferring till Monday because they're waiting for additional guidance to answer some of the questions we've had and some of their own. Some banks are live and were live in the middle of the night last night. One note on this page, see the application form on the right. Make sure you are aware that this was updated overnight last night. This is not the same form as that was originally provided. It's, I'd say, largely consistent, but there are a few clarifications and some changes here, so make sure you're using the correct form when applying. No guarantees they won't update that form again. Finally, how should I prepare? Well, hopefully you have been preparing already by pulling documentation, starting to run through calculations and all that. I'm not going to go through any of this in detail. This is something that we had provided to our recipient list on our RKL website. And this is just not necessarily a definitive list, but it's some guidance to help people get started with pulling documentation. Of course, consult your lender with the specific documents that they are looking for. We'll move on to our second polling question. Again, to be eligible for CPE, you need to answer each of the polling questions. This is number 2 of 3. So could you please bring that up? Thank you. Second one is, does your firm have over 500 people? We'll give you a few seconds to answer that question. And just as a reminder, as it relates to this question, the 500 people, I would say let's clarify that and make that 500 total employees, excluding independent contractors and considering all employees across all organizations of which you have control, and making sure that you're not doing it on an FTE basis.
All right, well, thank you, Ryan. I'm going to jump back in here. This is Eric, and we'll leave the polling question up. You should be able to see that. If you haven't answered, please do so. And then as soon as you do, it should disappear from your screen. The next section we're going to jump into here is specific to the loan forgiveness. And I would say this is not necessarily priority 1 for the day, but we've had a lot of questions. I think priority 1 for today is talk to your bank, as has been said. Make sure that you're in discussions with your bank to, get your process moving forward with the loan application. But there are certainly questions being raised about how does this forgiveness aspect work? Because like Ryan said, it's only a grant if you can have it forgiven. So first of all, if the loan is used for its intended purposes during the 8-week period that starts when you receive your loan, then you can have it forgiven. And notice this list of items is starting with the payroll costs. So it's very similar concept to what Ryan outlined previously, which was, how do you determine how much of a loan you can get? But now in contrast, when we're talking about the forgiveness aspect, so assume that we received our money. For sake of argument, let's pretend that we get approved and we receive funding on April 15th. We have from April 15, May 15, June 15, those 2 months to incur various costs. And then we go back to our bank and say, here's my evidence of having spent these various costs. Now I want my loan forgiveness. What types of things can you include? Well, you have your base payroll costs, obviously, and the benefits associated with your employees and other, payroll and benefit items. You have mortgage interest on a loan. The loan has to have originated prior to February 15th. We're going to see this date popping up everywhere. So if you had mortgages that existed previously, the interest component, not the principal, can count as a valid expense. Let me jump back. I'm not sure what happened there. Sorry. In addition to that, we have, sorry, this slide deck just went wacky. Okay, I'm gonna go back here. There we go. Sorry. The rent that you paid for a lease that was in force as of February 15th also qualifies. Certain utilities would also be eligible. When you look at this list, basically what Congress was trying to get to here is a concept that says, not only do we want to keep our, companies employing people, keep people employed, but let's make sure that the business can keep their doors open. And that means they need to pay their mortgages, they need to pay their rent, they need to pay their utilities at a minimum. And this loan is eligible to fund those types of expenses. One of the things that is new here this week is the SBA came out with guidance that said, okay, you can have all these variety of different types of costs, but you may not have more than 25% going toward these items, meaning everything other than payroll. Stated another way, 75% or more of your loan costs that you intend to have forgiven need to be paid in payroll. So that's just another sort of hoop that has been introduced this week. Talking about the forgiveness concept, there's two different hurdles that we need to clear if we want to have forgiveness. The first one relates to full-time equivalents and the amount of, employee headcount in terms of full-time equivalent. The second consideration is whether or not people's pay has been reduced. So let's go through a couple of examples here just to hopefully make this a little bit more clear. Our XYZ company has $12 million of payroll a year. And this is for the period January 1, 19 through 12/31/19. Again, there's a little bit of ambiguity around which pay period, or which period of time we look at for the eligible payroll, like Ryan said. Our belief is, based on the most recent guidance, that it's leaning heavily toward the full calendar year 2019. So we determined that we had $12 million of payroll costs, including benefits, works out to $1 million a month. We are eligible for a loan that's based on 2.5 months at $1 million. So we're eligible for a $2.5 million loan. So we put in our application for PPP with our bank and we get our $2.5 million. And then the 8-week clock starts and we need to incur various eligible costs for forgiveness. And we keep a tally of those. And then we go back to the bank and we give them evidence of having spent costs. And we can show that we only spent $2.2 million in those various costs. And that means 2.2 is eligible for forgiveness, but it's before we consider these haircut tests. So right out of the gate, we're going to owe back $300,000. Next up, let's talk about some of these haircuts. First would be the idea that we've reduced our FTEs. What we need to come up with here is a mathematical calculation, numerator, denominator, to apply. And the numerator is going to be based on the average number of FTEs of the borrower during that 8-week period from the time the loan originated. And we're going to need to look back at the period of February 15 of 19 through June 30th of 19. So go back a full year to that February to June time period, and on a full-time equivalent basis, determine how many people did we have, how many employees did we have. There is an election that can be made that says if you prefer to take January 1st through February 29th of 2020, you can do that instead to determine what your baseline was. And I didn't go into detail in this. Seasonal employers have their own rules with this. So let's look at a little bit of an example here of how this might work. Our same XYZ Co. had 240 employees during the 8-week period after it got that $2.5 million from the bank. Then we do the analysis to say, what was our baseline full-time employment? During the period February 15 through June 30th of 19, our company had 300 employees, which is 60 more than it has today. So, and I should say here, in addition, January 1st, 2020, for simplicity, we're also looking at this alternative test and we're saying, well, we also had 300 employees back then. What that means is the loan forgiveness, which we determined was so far reduced down to 2.2 million based on our prior example, now needs to be reduced by 20%. 20% means we lost 60 FTEs out of a baseline of 300. So we need to take 20% times the 2.2 million, and we find out that we've, foregone forgiveness on $440,000. Then we have another consideration, another way that we can lose forgiveness. Total reduction in salary during the 8-week period for an employee earning less than $100,000, if their pay has been reduced by more than 25% when compared to the most recent quarter before the 8 weeks, you have a reduction issue. So Jane Smith is our example. She works at XYZ Co. She previously earned, in our prior quarter, she was earning 70 grand. But then we took out the loan, the PPP loan, and her salary as part of a cost-cutting measure, she got reduced to 40 grand. That's more than 25%. And so we need to look at the difference. The difference, she lost 30,000 bucks. And if we recap what happened here now in this example, we started with a $2.5 million loan. We owed back 300 because we didn't incur enough qualified expenses. Then we reduced our head count, if you remember, by that 20% amount. So that reduced some of our forgiveness opportunity. We also cut this individual's pay more than 25%, and that's just a dollar for dollar reduction. So now we're down to $1.7 million of that 2.5 is able to be forgiven. I'll just say here that what we're explaining right now is based on what we know. There's a lot of guidance that needs to come out because the devil's in the details in this. I think most people, including the SBA, are taking the position of, we'll get you more guidance on the forgiveness when it becomes relevant. I think most companies are saying, we'll go borrow as much money at 1%, if we even pay any interest, as we can possibly get our hands on. If we need to pay some of it back, so be it. And it's helpful to understand what the forgiveness provisions might entail. On this slide, and I think, this is not something that you can, quote unquote, take to the bank, no pun intended. You have an opportunity potentially to restore furloughed employees or to go hire new employees in order to try to get your head count, your FTE count back to restoration level. As an example, if we said the ABC company had 40 employees before they went down to 30 in April, and we paid Bob Smith 60 grand that got reduced to 30. If before June 30th, or perhaps sometime during your 8 weeks, we need more clarity on that piece, you have an opportunity to hire back the 10 employees that we had been reduced, or raise Bob's salary back to its 60 grand and still get 100% loan forgiveness. Again, we're not fully certain on the mechanics of this yet, but that's the concept. And I'll go back over to Ryan here.
Okay, thanks, Eric. So we get the question on the triple P, well, what if I'm ineligible? And there's a good chance that the ineligibility is due to the size of the company, or maybe the aggregation rules. Whatever the case may be, what if I am ineligible? What do? I'm a business with 600 employees. What do? I still have the same needs and the same demands as other businesses that are fitting the criteria and able to access those funds. So what has the government put into place? Well, this is also part of the CARES Act that's known as the Exchange Stabilization Fund. And basically, as part of the CARES Act, the government, and you'll see the blue box in the upper left-hand corner, the government, through the CARES Act, pledged $454 billion, really up to $454 billion, in order to stabilize the marketplace for securities and other loans. They said, look, this is actually going to essentially be like equity with it you can get debt on, just like various other forms of equity. And the bank in that case is going to be probably the largest bank in the world, the U.S. Federal Reserve. So if you take that $454 billion, assuming, and this is just general estimates that are out there, assuming you can get 10 times leverage on that money, you're now lower left-hand corner of the screen, $4.5 trillion of capital that is available, not necessarily pledged to be spent, but available to be provided into the financial and capital marketplace in order to stabilize as different markets need to be stabilized. That's what's going into these green circles in the middle. Basically, these are potential different markets that may need stabilization depending how things go. Most of these don't really apply to you other than perhaps in your investment portfolios, things like muni bonds and CMBS and commercial paper and all these types of things. Not need to worry about that too much. But the big one is the bottom green circle. There is the ability to form a vehicle in order to make loans, probably not forgivable loans, but loans into the small and medium size enterprise marketplace for those that were ineligible if those businesses need access to capital and the banking and other financial markets freeze up. So what you can see then going from that green circle into the yellow triangles, they go, ultimately this will support the banking system if the banking system needs liquidity. And then finally that makes its way out to some businesses with some cute names of TV and movie cultural references for your viewing enjoyment.
All right, I'm going to hop back in here and talk a little bit about the tax filing and payment deadlines. We're just going to take a little detour on a couple other tax items that are hot this week. This is in your slide deck. Again, if you haven't received the slides in email, you can access them on the RKL website. The Coronavirus Resource Center has these slides, these webinars, as well as a whole bunch of other information that we're updating. What I just wanted to highlight here, what are the deadlines? We start here with the federal original due dates and now what the revised due dates have become. Back at March 15th, everything was humming along fine. Those due dates stood. Once we get to the 415 deadlines federally, you notice all the 415s have been substituted with 715. July 15th has become the new 415, if you will, for all of these federal filings, corps, individuals, trusts, gifts. Foreign bank account reports, just to mention the FinCEN 114, that is automatically due October 15th, so nothing there to worry about. And then over here, we did get some new guidance this week out of Pennsylvania Department of Revenue. The 415 deadlines for partnerships and S-Corps got pushed to 715. The C-Corps that file RCT 101s went from May 15th to August 14th. Yes, indeed, August 14th, just to keep it interesting. And the personal returns, PA 40s, are also similar to Fed, going out till July 15th. Local returns, local earned income tax returns, are also pushed out till July 15th, and so are trusts. And I should mention here as well, if you want to do an extension, I mean, what these dates now represent, the July 15th, is the original due date. If you want to extend, you can still extend, and that will buy you out till October 15th for the personal taxes. I wanted to quickly cover Section 139. We mentioned this before, and this is a sort of obscure code section that had limited relevance. Came into the code right after 9/11, and it's more so used when there's a tornado or a hurricane. And in big picture, it's an opportunity for, in a federal disaster area, it's an opportunity for an employer to make tax-free payments to reimburse or pay employees for various reasonable and necessary expenses that are not otherwise covered by insurance. That's an important point. If people are getting insurance proceeds in some regard, well, then this stuff's out. But I think all of the tax advisors have coached their clients, to be really careful about, you can't pay stuff to employees without typically triggering an income tax or a payroll tax issue. Here, we actually have some additional freedom because of this federally declared disaster for a company that says, I'd really like to help out my employees. And in what ways might that be? To the extent that it relates to coronavirus costs, an employer could pay their employee on a tax-free basis, and the employer still gets a deduction for that cost. What types of things might show up there? You could have some medical expenses that maybe weren't, again, it's important that it's not covered by insurance. Other health-related expenses, certain over-the-counter meds, hand sanitizers, masks, you name it, any of that type of stuff could potentially be eligible. Maybe there's a child care issue, so you as an employer are helping to fund that. Tutoring expenses, everybody working from home, maybe you're saying, hey, we're just going to give you some money toward various costs to maintain a home office. And hopefully this doesn't become a reality, but even funeral expenses, those would not be taxable to the employee. The employer could just fund as they saw fit. You can do this without regard to how long that person's been employed. There technically is no cap. You can't double dip this, meaning that you can't, claim it, but then also submit it as an insurance item or as something going through an HSA. There's very, very little formal guidance on this because it is such a, relatively new section and, not up until this point, barely used code section. I think our discussions have indicated that as a company, what do you want to do? Maybe you just want to have some documentation around the start and end date of your program, the description of who may be eligible, what types of things you're going to do. Basically, just keeping some records. Again, it's not a hard and fast rule. So hopefully we're going to go to polling question number 3. And while Jen brings that up, I'll just say on the section 139, I was on a call yesterday and the comment was made about, well, maybe we could give our employees gift cards to fund some various expenses. In the past, that would have been a big no-no, and the tax advisor would jump up and down and say, you can't really do that on a tax-free basis. That's what's changed. So here's our polling question number 3. Have you been in touch with your lender regarding PPP? And it's a yes or no, very simple question. So we're going to keep that up here for a couple minutes, but in the meantime, I'm going to advance this slide and turn it over to Stephane Smith. And Steph will go through some of the latest updates from an HR consulting standpoint, because there are certainly a lot of labor implications in the legislation that we've seen recently.
Thank you, Eric. So good morning. I'm going to take a few minutes here to share with you some of the frequently asked questions that we've been receiving this week. But I'm going to start off by sharing 2 additional resources that are available that will hopefully simplify some of the overwhelming information that you can see out there. So first I have here is RKL Human Capital Management team has put together an employer's cheat sheet when it comes to helping you navigate determining eligibility and compensation available to your employees who may qualify for the benefits under the Families First Coronavirus Response Act. You can locate this document on RKL's website in our Coronavirus Resource Center. The next one I want to share with you is this is a slide or a sheet from the PA Department of Labor. They have created a scenarios and available benefits guide to help people determine their eligibility for benefits. It's really simple. This document can be located on the Pennsylvania's Office of Unemployment Compensation website. So to get into some updated guidance, additional guidance has been released on April 1st, stating that employers with fewer than 50 employees may be exempt from providing leave under the Emergency Paid Sick and Emergency Family Medical Leave Expansion Act, based on the criteria provided by the Department of Labor. The employers must thoroughly document that an authorized officer of the business has made a determination that either leave would result in financial obligations exceeding available revenue and cause the business to close. The absence of the employees requesting leave would cause substantial risk to the financial stability of the operations of the business due to the specialized skills, knowledge of the business, or responsibilities of those employees. There is an insufficient amount of employees who are qualified, willing, and able and available when and where needed to perform the duties of those who are requesting leave, and their skills or services are required for the business to operate at minimal capacity. Looks like I advanced a little bit farther. I have an employee who was on FMLA prior to April 1st. Does the emergency FMLA apply to this employee? So the employee is eligible for the 10 days of emergency paid sick leave, regardless of prior FMLA usage. The eligibility, though, for the expanded FMLA depends on how much leave that employee has already taken during the 12-month period determined by the employer. So the expanded FMLA time would be counted towards that in total entitlement. So to give an example, if the employee previously used 4 weeks of FMLA prior to the COVID-19 pandemic, they would be eligible for 8 weeks under the expanded FMLA Act. If the employee used 12 weeks of FMLA during the 12-month period, then the employee would not be eligible to take additional leave under the emergency FMLA. So, and to note, if you're an employer that only became covered under the FMLA as of April 1st, this example does not apply to you. My employer closed before the Families First Coronavirus Response Act became effective on April 1st. Do I still qualify for paid leave? The answer is no. The paid leave options under the Families First Coronavirus Response Act cannot be applied retroactively if your employer closed and stopped paying you due to lack of work prior to April 1st. This is true regardless if they closed due to lack of business or due to a local, state, or federal quarantine ordinance. However, you may be eligible for unemployment compensation. The same is true if you requested leave and your employer closes on or after April 1st due to the lack of business or due to the local, state, or federal quarantine ordinance. Again, may be eligible for unemployment compensation. I own a medical practice who is considered to be a healthcare provider who may be exempt from the emergency paid sick leave and or emergency FMLA. So under the Families First Coronavirus Response Act, a healthcare provider is anyone who is employed at any local health department or agency, doctor's office, clinic, healthcare center, hospital, medical school, local health department or agency, nursing facility, retirement facility, nursing home, post-secondary educational institution offering healthcare instruction, home health care provider, any facility that performs laboratory or medical testing, and pharmacy or any similar institution, employer, or entity. This includes any permanent or temporary institution, facility, location, or site where medical services are provided that are similar to such institutions. And this guidance can be found on the Department of Labor's website. What do I do if I have to close my business after April 1st and I'm paying for employees who are on paid sick leave or expanded FMLA? As the employer, you are required to pay your employees for any paid sick leave or FMLA leave benefits that they're entitled to prior to closing your business. Once your business is closed, you're no longer expected to pay the employee under the Families First Coronavirus Response Act. However, at that time, they would be eligible to file for unemployment compensation. This is true regardless if you close due to lack of business or due to a local, state, or federal quarantine ordinance. And lastly, when will owners, gig workers, those who are self-employed, et cetera, be able to get PA unemployment? This is the magic question that everyone is asking. So individuals who qualify for the Pandemic Unemployment Assistance Program, which includes individuals not otherwise eligible for unemployment compensation, you're encouraged to go to your local state, to your state unemployment insurance website for guidance. The Pennsylvania state specifically is still awaiting guidance from the federal government at this time, and they plan to provide special instructions when the claim process becomes available. So they're currently asking those individuals who are eligible under the CARES Act to not file a claim through the existing online system or phone number, but keep visiting their site regularly to watch for that guidance once it comes out. Now I'm going to pass it back to Ryan for closing remarks.
Okay, thank you, Stephanie. Just just wanted to wrap things up today. First of all, by thanking you all for attending. Many of you have been with us for now 3 weeks on these webinars. It has been a real pleasure personally for all of us to have served you over the last few weeks, and we hope to continue to do so during all our times of need. I wanted to make you aware of our Coronavirus Resource Center, which is on our website. Definitely take advantage of the multitude of resources that are out there at rklcpa.com. You know we are working around the clock, and that is no exaggeration, to keep everybody informed and provide resources that will allow you to execute on the many topics that are discussed today. Also wanted to make you aware of our loan application assistance. We encourage you to move as quickly as possible and to apply for these SBA loans and programs that we discussed here today. As it's been mentioned that money is going fast, we want you to know, especially if you're an RKL client and you need assistance with that process, you can find a link on our resource center, and you can fill out your information, and an RKL team member will help get back to you and can help you out in the process with filling out the loan application for the PPP program. We have some specialized services that we'd like to take a moment and make you aware of. We can support your specific inquiries and business needs during these challenging times. We have a deep bench of experts who can help you with things like cash flow and other financial modeling, workforce planning, human resources compliance support, remote cybersecurity assessments, business process redesign, operations. The list goes on, and we're here to help you in all those areas. Much of our focus of today and has been so far has been interpreting acts from Congress and new provisions to the tax code, understanding the human resources landscape, but understand there are many other ways that we can help you more on an operational and financial basis as you try to make it through these trying times. So we certainly encourage you as an RKL client to reach out to your RKL advisor to discuss your specific needs. And for those on the call that are non-clients, we'd also love the opportunity to work with you as well. For those non-clients on the call today who want to tap into our experts, please contact Scott Kimmel. Scott's email address is listed twice on this page, so hopefully you can't miss it. And finally, just wanted to let you know that we are actually launching a new program that we're calling ADAPT, which provides a high level of triage support to your organization based on a 60-day action plan for your business. For companies on the call today that are looking for a dedicated team of experts to develop and execute a comprehensive plan that includes all areas of workforce, finance, and operational considerations, our ADAPT plan is something that you may want to consider. Again, please contact Scott Kimmel for more information on this new program. Again, thank you all for joining us. We look forward to speaking with you again next week, same time, same place, and you should be in our distribution list and be on the lookout for that email with webinar instructions for next week and registration. And of course, if you have any other questions, any specific questions, here are our presenter emails. Feel free to reach out to any one of us. We are here to help in everybody's time of need. Thank you, everybody.